Here we are on the pound-dollar 5-minute time frame, and we have a flag pattern that's set up where we've got a 3 drives pattern within the channel. We have held the channel and I've entered next bar market, and we've come into a structure level and the 618 fib as well. So currently risking 15 pips for 44 to target ones, 66 to target twos, so that 127 fib for second targets. It comes in at the psychological number 132 flat. So what I'd like to do is take you through and do the higher time frame analysis. Okay, so here we are on the daily time frame, and if I zoom in, what happened recently is that the market right here, this was Friday, tried to come up to retest the highs, failed, and then we put in a lower close, and on Sunday evening the market gapped open down to this particular level here. So not too much really on the dailies that we can use for this trade. Again, this trade is only on the 5 minutes, so daily time frame won't really have too much to do with that. But as you can see, since this morning we have been making our way up, and we've actually recovered all the gains that we lost due to that gap. So let's go to the 60, and you can see then for the past few hours we've been making our way down. We did violate this level of structure here, and then we've been working our way down. Let's go to the 15-minute, and 15-minute, not too much here to be honest. Let's go to the 5, and you'll be able to see this pattern better. Okay, so remove the VS1 levels, delete everything, and doesn't look very much here, but we can see we've had quite a nice directional pole up. We can see that we have structure that's been adhered to there, and for me it's very important that we get these right, but I won't do them this time because I showed you on the oh well, there we go, I've got them correct. So you can see that we've had 3 touches on either side here. If I put a structure level in here and zoom out a little bit, you can see that we've come in to the structure level here. In fact, if I just highlight the wicks, you can see that we've come into that level. And what I need is, after this bearish candle tested the trend line, I needed a hold, and that's where I got the hold, and I then entered next bar market. So you can see now we've had a higher close. So what other confirmation do we have? Well, I like fibs to go on, and you can see here that there is the 618 just here. We tested that. We've actually broken down and tested the 786, which is still perfectly valid. We've had 3 touches and we've come into the structure level. So what else do we have? Well, sometimes we get very nice harmonic moves within the channel, and if we do this, let me do that again, the harmonic move comes from up there. We take it from the highest point, or at least I do anyway. This is what I found with these patterns. Take it from there. You can see that's an AB equals CD move, and we do the same again, and we have exactly the same thing. So we have a 3 drives pattern, and if you want to put some fibs on here as well, you'll notice they come into a 127, and exactly the same again here into that 127, giving us a very nice channel with harmonic movement, fib ratios coming into just past a 618 bigger fib. But just remember, this is the 5 minutes, so isn't as accurate as perhaps the higher time frame, but nevertheless we've come into that, and we've come into structure as well. So it has meant that there's just 15 pips of risk here, and the reason for that is I am not expecting this level to be breached. Let me rephrase that. If this level gets breached, then I'm anticipating that I'm going to be wrong. I want to give it a bit of breathing room as well. You never want your stops too tight. I mean, if you put them here, you can say, well, if that level's breached, you're going to be wrong, but what about those spikes that come down? And the last thing you want is to be spiked out of a winning trade. So that is the trade. We'll come back and see if we can turn this one into a winner. Wow, well, I certainly got in this trade at the right time. You can see we're rallying up here towards targets. Well, we had a burst and we failed to put in a new high. and so we're coming back down now. We could actually just be coming back down to retest the lows here. Either way, I am not anticipating another test, so there's no reason for me to have the full exposure of the 15 pips. So what I've just done is implement risk management. I've now reduced down the risk on this trade, and so the risk now is 12 pips. It's not a lot, it's only 3 pips, but 3 pips at the end of the day is 3 pips. We got, I don't know, 35 pips up here, something like that. We put in a big rejection candle and we're trading within that wick. This thing could just get sucked back up and put in a pin bar here in the last 5 minutes and then rally on up to hit targets. Certainly that's what the pattern indicates, but obviously we're putting up a battle here with this big rejection candle, so no need to get worried. The fact is, we tried to have the breakout, we failed on this attempt. This could quite simply be just the bears pushing back down before the bulls take over again and come back up. So nothing to be worried about, but there is no reason now for me to have the full 15 pips of risk. So let's reduce down to 12. And we're back for another update, and just as I mentioned, we could be putting in a pin bar, which was right there, and now we've broken out of the channel. Now here is the thing, we might be broken out the channel, but technically we're still trading within this wick, and that wick formed within the channel. So technically we're not out of the channel, though technically we are. Just depends how you look at it. For me, technically, because the wick, the candle closed within, the candle opened and closed within the channel, and this was just a spike up. Technically for me, this is not going to be a proper breakout until we break the highs here, but nevertheless we've now broken out of that channel and closed out of it, and we are heading in the right direction. So 29 pips up, we've got to get up to 44 before we can have target ones hit on this trade. And we're back. The time is 6:50 in the morning, and this is anything but a pain-free trade. So just to recap what's happened here, we did double top here, the market came down, put in a big pin bar, giving me an area where if this zone was breached, then I'm likely going to be stopped out of the trade. So because it's given me a defined structure area, and we have had 3 tests here, then I was able to move my stop up to below that, which meant I was able to get to break even. Because what we're doing now is we're consolidating. Now the trade is still valid, the trade is valid until we hit the stop or the targets, but there's no need now to have any additional risk on the table. So what we've done in the night is we've consolidated here, and we put in a higher high, higher close, and we've got another 6 minutes to go until this candle finishes. Obviously it would be nice here to see this entire level here breached and we go up to hit those potential targets. So I'm not too sure if we're going to do that, but there we go. It is currently a risk-free trade. Hopefully we can get up there for targets. It would be lovely if we could, because this is you know, this was a very nice looking trade. Okay, not too sure if the video caught that. It was within a split second. We've just rallied up here and hit target ones for plus 44 pips. And we're back for secondary targets, and we've actually come within a couple of pips here of secondary targets. So I'm just going to pause the video and come back and hopefully catch this thing hitting. And we're back. And there you go. I just caught the last second of that. I was just about to say average earnings about to come out, and we're just going to record this to see if targets get hit, and we did. So there we go. Second target's hit now on this beauty of a flag pattern. Very, very painful as mentioned, but nevertheless we held the trade, we stuck to the rules, we implemented risk management, we handled the trade very well. So as usual, if you haven't subscribed, go ahead and do that, and please don't forget to give the video a like.